A few days ago, I posted this on my channel. I posted a poll that said, "Hello everyone, this morning I decided to double down on my position in Chewy stock. It is now larger than Corsair Gaming, CRSR, and my new largest position in my portfolio. There is one huge catalyst that has been brought to my attention and that has not been mentioned previously. I'll be going over this catalyst in the video next week. This is a long-term hold for me and I'm very excited about this stock. What do you think? Is it the right move?" And 40% of you thought that it was a good move, and the other 60% thought that I was going to get wrecked. And just as proof, I wanted to show that I did double down that position. I bought another 100 shares on October 13th. Today is the 17th, and if we go to my total portfolio, we look at my positions, it is now my large position. You see here we're sorted by cost basis, and I now have $14,300 invested in the Chewy stock, which is 200 shares worth at an average price of $71.59. Beating out my previous largest position of Corsair Gaming, I now have my largest position in Chewy. And one of the main catalysts for why I'm investing in this company is what I'm making this video about. In that poll that I put on my channel, I said that there's one huge catalyst, and I looked over this company for weeks and weeks and trying to dig into annual reports, quarterly reports, numbers, qualitative, quantitative, everything you could imagine. I'm trying to understand this company on a deeper and deeper level. Okay, and that said, I don't know how sometimes when you're investing and you're doing research, you get tunnel vision and you only focus on what you're just looking at the moment. And I didn't think outside of the box, and it wasn't until 3 days ago when I posted that poll that I thought of this as a possibility for Chewy stock. So I hope you guys enjoyed this video. Go ahead and check out links down below in the description, including referrals to Yada savings accounts, credit card referrals, Webull, Robinhood, M1 Finance, all that great stuff. And let's go ahead and start with the number one catalyst for why I think Chewy stock in the near term, within the next 12 months, could see some upside potential. If we go ahead and jump over to Yahoo Finance here and we scroll down and we look at their earnings per share, you can see that they're finally starting to turn positive. If you want to see in terms of their earnings, their actual net income, for the last 3 quarters, 2 of them have been profitable. In the fourth quarter of 2020, they made $21 million, they produced $38 million next quarter, and then they had a $16 million loss. But overall between the 3, they definitely have a positive number. Now, why is this important? Well, this potentially could make them eligible for the S&P 500. They have a large enough market cap, and we'll actually go through the requirements here in a second. But I want to talk in this video about how important it is to get inside of the S&P 500, and I want to use a perfect example, and that is Tesla. Now, this is the chart that I'm pulling up right here. You can take a look at it. Now, November 17th of 2020, right here on this big jump up, you can see that it spiked up and it uptrended and uptrended and uptrended. And then you see where my mouse is hovering. You see this big green stick, this big green volume chart right here. You can see that the volume spiked from normally doing 50 million shares traded every single day. This day, on December 18th, 2020, it did 210 million shares traded. And what this was, in case you're wondering, this first day back here on November 17th was when they announced that Tesla would be joining the S&P 500. Now, over the coming weeks, over the next month or so, there would be hype built around the stock. People were getting excited, starting to invest, get excited, and then a month later in December, they actually physically bought into the index. Now, since that time, if you want to look past that point, more and more funds bought into this company and took advantage of the run-up that this company would experience, and it pushed it all the way up to $900 a share. Now, how does this relate to Chewy? Well, right now, Chewy has seen a lot of investor demand. This is the all-time chart for Chewy. Initially going public at $36 a share, right there where my mouse is. Today, even after the downturn, it is almost double that price at 63, and it has lots of volume, it has lots of investor activity. Usually you see, hovering my mouse, you usually see something like 2 to 4 million shares traded every single day. So this gets a lot of investor attention, even though it is, quote, a smaller cap company. Now let's go line by line and look at the requirements to get in the S&P 500, because a lot of people don't actually know even what it requires to get into it. And if you don't know, if you're a newbie, if you're kind of newer to the stock market, the S&P 500 is the top 500 companies in the United States. And so this is kind of like your big dogs essentially, right? So this is not just some Joe Schmo company that just started a startup just last week. These are companies that are tens, hundreds of billions of dollars, sometimes even in the trillions of dollars. These are your big boys. Think of big names like Walmart, Coca-Cola, Amazon, Home Depot, Costco. These are the type of names that you hear in the S&P 500. A lot of these you know and see every single day. But what are the requirements line by line to get in the S&P 500? Well, go ahead and take a look at this document that I pulled up, and I highlighted the key bullet points here. This is actually from the S&P itself, from spglobal.com. And you see, we're gonna go line by line and make sure that S&P 500 inclusion for Chewy stock is possible. To be eligible for the S&P 500 index inclusion, a company should be a United States company. Chewy is a US company. They're based out of the United States. That's not a problem. Next, they need to have a market capitalization of at least 11.8 billion. What is the market cap of Chewy right now? And remember, this is after the downturn. Even after the downturn, where my mouse is, they have a market cap of roughly 26.5 billion. So over double what is required of the minimum amount. So 11.8 is required. Right now they're 26. So they're putting it on the market cap. It has to be, quote, highly liquid. Like we said, you see, let's just look at the last trading day. Okay, October 15th, they traded 2.87 million shares. That is what I would consider to be a highly liquid stock, one that trades millions of shares a day, very easy to get in and out of positions. Just an example for my 100 shares that I bought, it executed that trade in about 1 second. So not illiquid at all, very liquid. Next, it needs to have a public float of at least 10% of its shares outstanding. Okay, does it have 10% of its shares outstanding? Shares outstanding is 417 million, and so do they have at least 41 million shares in the free float? Well, they have more than that. They have about 20%. They have 83 million, so more than 10% in the free float. And then last but not least, and this is the most important, and this is what has kept it from getting in the index beforehand, and its most recent quarter's earnings. And the sum of its trailing 4 consecutive quarters' earnings must be positive. So essentially, it needs to do 2 things. It needs to, 1, in the last year, the last 4 quarters, have a profitable number, and B, its most recent quarter, the last 3 months that are reported, needs to also be a positive number. Now, looking at the last 4 quarters for Chewy, you can see that they're not eligible. First off, their last quarter was not profitable. It was a negative number. And the sum of the last 4 quarters are not profitable either. But if you take out this one that I'm hovering over my mouse, the 3rd quarter of 2020, they're going to start going based off of these next 3 in the quarter that they're going to be reporting in the next month or so. So the thing is, if we add up these next 3, okay, so they have 21 million. So 21 million, let's go ahead and add that up. 21 plus, let's go back to hypercharts, 21 plus 38.7, and then add their unprofitable quarter. That quarter they lost 16.6 million, and they have a positive number of 43.1, so they're well in the green. And so basically what we look at when we see this here is that if they are able to produce a positive net earnings quarter, if they can produce any bit of positive number, it doesn't matter how big or how small, anything in the green, this company has every check mark to get into the S&P 500. And the thing is, even if they don't do it next quarter, if they're able to do it the quarter after that, you can see it the last couple of quarters for this company will either be very profitable or just slightly unprofitable. And what matters is the sum of the last 4 quarters and the most recent. And so the thing is that Chewy might be able to get into the S&P 500 within the next few months. Now, if they have a couple of unprofitable quarters, we may be looking 6 to 12 months realistically at the longest possible. But as you can see, based off of this information, I would be absolutely shocked if Chewy was not in the S&P 500 within the next year. I think sometime, whether that's 3 months from now, 6 months from now, 9 months from now, whatever, sometime between now and the end of 2022, I think Chewy will be added to the S&P 500. Now you might be wondering, okay, Tesla saw a run up in its share price, both running up to the S&P 500 inclusion and also after it. But for Chewy stock, why is that so important? Chewy's not nearly as big as Tesla. Are people going to give the investor attention to a Chewy versus like a Tesla that's 10 times the size of Chewy? Actually more than 10 times, like 30 times. But let's go ahead and look at this. I'm going to pull up some growth ETFs, specifically S&P 500 growth ETFs, okay? And I want to delete these other tabs here so we can make some room, but let's go ahead and take some examples. Now, when Chewy is included in the S&P 500, they obviously get bought into all the funds that track the S&P. They get bought into ETFs like VTO, the Vanguard S&P 500 ETF. They get bought into the SPY, SPY, which is another S&P 500 ETF that's very popular. Now, those are obvious, right? But that's not it. If you look at these more niche products, these niche growth ETFs that are in the S&P 500, these funds manage tens if not hundreds of billions of dollars. And let's look at some examples. One of them is SPYG, not the SPY, but the SPYG. This is a S&P 500 stock index that only invests in growth companies inside of it. So for example, its holdings does not hold 500, it only holds about 200 holdings. And that because it selects the ones that it finds that are most interesting in terms of growth companies that are only in the S&P 500. The assets under management of this ETF is $12 billion. If we keep going further, let's look at another one that's the exact same thing. Once again, S&P 500 only, and only looking at specific growth companies. This is the IVW. Let's look at the assets under management under the IVW. Its net assets are $35 billion. What about another one? What about the big dog, the Vanguard, VOOG? Same thing, S&P 500 Growth Index, only focusing on growth companies. The S&P 500, once again, also has about 200 holdings. If we search VOOG, you can see that this one has net assets of $6 billion. Just those 3 ETFs I pointed out, and there are many, many, many others. That just those 3 alone, you're looking at about roughly $50 billion in assets under management. That doesn't even count the traditional S&P 500 indexes, and that also, more importantly, doesn't count lots and lots of fund managers that don't even consider a company until it's in the S&P. And so between hedge fund managers and different types of managed funds and just personal investors, even some retail investors probably won't even consider this company until it's in the S&P. And all of this is shaping up for an opportunity as just one more catalyst for Chewy stock. Now, the thing is, if I'm completely wrong and Chewy does not get in the S&P 500, that doesn't change the story, okay? That doesn't hurt me in any negative way. That's the beauty of this, is while I think with high levels of certainty that this will be an S&P 500 stock, it doesn't matter, because at the end of the day, I'm investing for the business. It's a growing business, growing revenues, eventually growing profits, and it has a wide economic moat versus its competitors like Petco, PetSmart, and it's one that I'm very happy to own. And so while it's a great company to invest in, I think I just found one more big catalyst that will attract a lot of investor attention, likely sometime between now and the next year, and it just makes me that much more excited and more bullish on the stock. But thank you guys so much for watching. I appreciate you watching all the way to the end. Check out links down below in the description. A1 Finance, up to $50 for getting signed up to that link. Robinhood, get a free stock. Webull, get 2 free stocks. Yada savings accounts, get free lottery tickets. And then what else am I offering? Credit card referrals, up to $50, $100 for getting signed up with credit cards. Thank you guys for watching, and I'll catch you guys next time.